Today I'll be showing you how to buy put options and call options on Robinhood and which situations you should do each of those in. So we're going to go over to Apple. Here's my example. You're going to come over here and click Trade Apple Options. So if we were to look at Apple, we see that, past the past week, it's been pretty stagnant. It hasn't moved too much. One of its lowest points was at 145.42. One of its highest points was at 147.88. So it moves about $1 or $2. Same with the past month. It doesn't move that much. Same with 3 months. It just goes up gradually. So this is just my example. I wouldn't copy this exact options I'm going to show you, but I'm going to show you, just teach you how to do it on Apple. So if you go over here to buy a call, when you buy a call, you believe that the stock price will go up. So right now it says expiring on August 13th, and when I'm recording this, it's on August 6th. So that's about 7 days away. And so what it's saying is, if I were to buy a call at the 146 price right here, click plus, if I were to do that, I believe that by August 13th, the share price of Apple will be above 146. And so if you come over here, it shows you a little graph. It's not as accurate as a graph I'm going to show you in a second, but it'll show you kind of a breakdown of it. And you see right here at 147 is where you break even, and then you start going into the profit range. You might be confused because you bought the price at 146, so you're confused as to why it has to go all the way up to 147. And so that's because the closer to August 13th you get, the more the price will have to move in order for you to make your profit. And so that's why on August 13th you're going to have to break, 149.50 to start making profits. And so let's say that we bought this one. Let's say that we bought this call expiring on August 13th at 146 when the share price right now is 145.95. So we're going to come over to Options Profit Calculator to visualize this a little bit better. And you're going to click on Long Call. Because we're bullish, we think that the price of Apple will go up. So we're going to go over here, enter the ticker symbol of Apple, get price, it's going to update the price for us, and we're going to buy, make sure you have the date right, the 13th of August, we're going to buy a call at 146 is what we chose. So make sure you're on the call side, the left side, 146, and we're going to click that one right in the middle, the 1.43. Now we're going to click calculate. So this is kind of how you can visualize exactly how this is going to work. So like I said, you see as it gets closer to the expiration date, you're going to need the price of Apple to move more in order to stay out of the red. You see it's kind of like an upward staircase. So this is an options that you're going to make when you're pretty certain that the price of Apple is going to rise by a lot. So let's say some big news about Apple came out, some big earnings, they made way more money than expected. You think the stock price of Apple will go up by a lot in a couple days. This is when you would buy a call. And so you can also set the date farther out if you think it'll take a little bit longer to reach your goal, but it's going to be a little more expensive. So now you see, if I were to go to 146, now it's 213 times 100, which is $213. But we're going to go back to the expiring August 13th. So that's kind of how you can visualize it. You can just go here and see, play around with it and see what it has to reach at what day for your profits to be made. You'll see right here if it's below 146.20, then you'll lose all the money that you spent to get into this option, which is $1.43 times 100, which is where you get to that 143 price point. So now I'm going to show you how to buy a put. So we're going to uncheck that. And so you buy a put when you think the stock price will go down. So let's say, some big news came out and they didn't make near as enough money as they were supposed to, or some big news came out and a lot of people are being laid off their jobs at this company or whatever. So you think this price will fall a lot. So you might want to come here and you say, hey, on August 13th, I think the share price of Apple will fall below $145. So you come over here, you visualize it again. At 145 is when you start to head towards breaking even, and you break even at 144.08, and after that you're in the green area. So let's come over here. Back to Options Profit Calculator. I'm going to click Long Put because that's what we chose over here. We're in a bear strategy. We think it'll go down. So you go back to Apple, click Get Price. I'm going to buy a put. Now look at the right side. Make sure date is correct again. And I forgot what price point, 145. So you go down here, buy a put on the right side, go to 145, go to that middle blue number, and then click Calculate. So this is how you can visualize the put you bought. And you can see, it's a staircase downwards. You need it to move more the closer you get to the expiration date for your profit to be more. So let's say, this news just came out, you just heard about Apple. They laid off a ton of employees. They're not making near as much as they're supposed to. You would go and you'd buy this put right here. And you'd think, this news just came out. It's definitely going to move a lot within the next week. So you're going to go buy it. Let's say it drops, crazy, four, not even four, I can't even see four. Let's say it drops $3 by 2 days from now. So let's say it goes here. Today's the 6th, so let's go 7, 8. It drops from 146 to 142. We can't even see that, but we'll make $141 in 3 days. So you definitely want to get into these buying puts and calls when you are pretty certain of what the movement's going to be. It's definitely a way to limit your risk, though. If we come up here, we can see, the entry cost is going to be $92 to enter. The maximum risk is just $92. That's the most you can lose. Obviously, maximum return is a lot, but that's if Apple dropped to a single penny, which is not going to happen. It says probability of profit is about 37%, but you can definitely raise that if you hear some news coming out about Apple and you think that it'll move in a certain direction. So that's when you buy. That's how to buy calls and how to buy puts and when you want to buy them each. And I definitely suggest going over here to Options Profit Calculator and kind of putting in the information you just did in Robinhood so you can visualize the graphs better. But that's about it. If you have any questions, make sure to comment them down below and I'll try to answer all of them. Thank you.